Ola Electric. Now, they filed their DRHP, and it's targeting an IPO early next year. This is the first public offering by an auto company in the last 20 years, and the first pure play EV company which is eyeing and listing in the Indian bourses. We understand they're looking to raise about 505. Yeah.
Actually, I'm sorry to butt in over here, Rima. Originally, we thought we'll discuss only Ola with Gurmeet, but given what the market is doing, if I could squeeze in that question first. Gurmeet, first of all, season's greetings to you, and good to have you today and at such times. And what a phenomenal rally it's been. It's been a great 2023. And the commentary that we're picking up from a lot of, international participants or chartists. Today, we're speaking to Atul Suri. The belief seems to be that this is going to last. Are you in that camp as well?
Hi, Surbi, and season's greetings. I think this Santa rally has been without a clause. There was some hiccup in between, when we saw some correction, and that's the nature of the game. I think the risk only goes up when you think everything is fine, right? And when all macros look good, whether it is oil, we had a current account deficit numbers, all high frequency indicators indicating economies on a good track. Is when probably the unknown thing strikes, and I think I have no concern as far as the medium term, long term story goes. But there are a few pockets one has to be careful. With every sharp rise, in the market, the risk is actually going up. We think on the otherwise. So I think there are pockets in small micro caps, there are pockets in IPOs where there is exuberance and some correction is due. It may also happen, market may completely make you look foolish, which it always does. And it may happen after Nifty goes up another 400 points and come back to maybe back at 21. But you just got to be careful with asset allocation. I think it's just that incremental money needs more diligence, in my view. And I've been maintaining this, Surbi. I think bond portfolio also offers good risk reward. A 50-100 basis point softening in yield will lead to 5, 6, 7% mark-to-market gains in bond portfolio also, other than the coupon being 7. So I think just balance it a little bit and maybe a little more bias towards large caps right now.
It's double dhamaka, double bonanza, right? It's not just stocks, but even bonds perhaps will start making you money now as we get into the new year. Gurmeet, just another follow-up question on the market. Like you said, that it's important to keep all your risk assessment measures in place. What the market is also doing is that despite all the disbelief, it's the same set of stocks that keep going higher and higher. Your Mazgaon Dock, your BEL, your industrials and CapEx. And then therefore, for those who are trying to play contrarian or going back to an HDFC Bank or trying to think of, Asian Paints for that matter, those themes are not working. So for fresh money allocation, you feel nervous. Should you allocate to a stock that's already run up to 100%, or should you sort of look out for things that have not run? What would you do as we start the new year?
So as I said, I think a little contrarian would help. I think banks continue to give good risk reward. HDFC, ICICI, SBI, I think all leading banks offer you good risk reward. So SBI, for example, is 1.2 times book, 9 times earnings. You have... Sorry. I lost you in between. So, and then, mid small cap pockets in banks are showing exuberance. I think IT could be a good contrarian bet for next year, but you probably have to wait it out for maybe 3-4 months. Pharma, in my view, is offering good risk reward, especially the CDMO names and the diagnostics names. They are probably due. I also think the agri budget will get a significant leg up as we enter the election year. And that one pocket which hasn't done well. So, agrochemicals, farm equipments, and more FMCG, which have rural presence, which have been slightly underperformers, could do well. So I think I agree with you. Some part of the portfolio could be in agrochemicals, some bit in IT, some bit in pharma and agri theme. And I think the exuberance part, which I said, so like, for example, railway or defense, the order book is probably pricing in next 6-7 years. Good news, right? So a lot of the good news is upfronted in the price. You will not get to know now. It will happen once, the time and the price correction starts. So that pocket, I think you've got to be very, very selective. In fact, a lot of that pocket is best avoidable right now in terms of incremental allocation.
Gurmeet, do stay on. We need to slip into a very short break. And on the other side, as promised, we'll talk about the Ola Electric IPO and the DRHP, which was recently filed. So we'll analyze it in greater detail with Gurmeet.
CNBC-TV18, embarking on a quarter century of excellence.
Okay, welcome back. Absolutely back at, it's like it's an all-time high, of course, and if you're just joining us, it's 21,593, which was the last high that has been taken out, and we were discussing that with Surbhi, Reema. Gurmeet, of course, is still with us, but there's another way to call it. It's a 4-day high, right? Because, I mean, the previous high was made on Wednesday when the market fell unexpectedly, middle of last week, if you remember. We opened the high point of the day, which is 21,593, traded strong with a 200-point gain, and then starting about 1:30 that afternoon, there was that severe fall. So there was a very large candle on the way down, which was formed. And 4 days since, I mean, today is the 4th day, with a holiday in between, which is Monday, we are back at new all-time highs for the market once again. So can't keep, indices in a bull market down. The trend has been up, and it's looking very, very good. Gurmeet is still with us. Gurmeet, thanks for staying with us. No doubt, I mean, the trend is up and it's a bull market and everything. I just wanted you to comment on the very near term, the end of the year kind of phenomenon, right? There are two ways to look at it. One is to say, I mean, we've spoken about this over the years, end of the year, volumes thin out, etc. So price moves are exaggerated. Foreigners are absent. So with little effort, you can do a lot as far as the price is concerned. I don't think there are reasons to do a lot because it's looking good out there. But just your thoughts, end of the year phenomenon.
I think you're right. I think low volumes can exaggerate movement, Prashant. But this is, a very, very strong uptrend. And, a lot of us have been advising clients that, few pockets are looking expensive. But the market, as I said, keeps humbling you. And that's why I say that, if you miss 10 best days in the year, your returns are gone by almost 60-70%, which is what market has done since November, right? If you miss the 10-12 best days and the returns could be suboptimal. But as I said, a lot of pockets require, there's no harm in taking some money off the table on, let's say, railway capex names or defense names. A lot of IPOs, if you've made handsome listing gains, especially in the small micro cap. I think what happens is reducing float, growing flows, can make a bubble out there, and that's the place you have to be watchful for. Broader Nifty, I agree with you, there could be some more legs. I think a lot of them, half of the market probably needs a bit of a catch-up, the like of HDFC, Reliance, some of the IT names as results come in January. I think that could be if IT delivers good numbers in Jan, I think market can deliver a little more in the short term.
There is also serious, obviously, FOMO factor, right? I remember last week we were discussing on the show, somebody I was talking to, a PMS fund manager who got the commitment from a family office. And, the plan when the money came in was to deploy it in a STP way, systematically, over a period of 3, 4, 5 months. And then, the fund manager told me that after I think it was the state election results, Monday we got that big rally. By Tuesday, he got a phone call and said that, well, put everything in. Don't. So from 4-5 months, it became all in immediately. Proved out to be a good decision, but that FOMO feeling is also very strong, and it's not confined to the lay investor. Professionals out there also a victim of that.
Oh, absolutely, Prashant. In fact, a lot of fund managers are stopping flows. Fearing some. You see, most small mid-cap funds have restricted flows. So there is that FOMO there. But as I said, the risk is actually going up if you are deploying. And sometimes you may look, staying out of the market. I have clients who were more waiting for 17,000. Now they will be happily putting money at 20,000. That's what happens. When it keeps making highs, your goalpost also keeps changing. But as I said, market will keep giving opportunities. Rotation is a better thing to do. Some small profit taking in few exuberant pockets may not be a bad idea.
While we're having this conversation on the market, Gurmeet, allow me to come back to that one little point of concern that you raised. And you spoke about recent IPOs. And nowadays we have like 3 listings a day. We're in that kind of a phase, right? So just tell us, if there are some names where you would be personally cautious, if you want to flag off, any of the companies where you think perhaps the numbers are not adding up. And in that light, let's quickly get your take on Ola as well, because here's a company, very high profile, marquee investors backing. They're looking to raise 5,500 crores from the public markets, but they're loss-making. They're making losses to the tune of about, I think, 1,400, almost 1,500 crores right now. Will this bull market be charitable to a loss-making, high-profile EV company?
So actually, bull market is the time when most of these hit the bourses, right? And so it is strategy. So if you see record IPOs always will coincide when bull markets are raging. I think one IPO which I did like, which unfortunately I did not get much allotment, was Tata Technology. I think that's something we'll continue to. In fact, we've added once it corrected 10-15%. All still very, very expensive. But I like this. It's a nice digital engineering play. Has its EV element in it. And they have great abilities on digital side. I personally visited their site and I was completely impressed. So did my team, including Aditya. Ola, coming to Ola, I think, the only thing which, obviously the strength is the weakness. I think they rely, which is what they've said in DRHP. They rely a lot on Bhavish, his reputation, his expertise, his services, what he brings. And he also is, in Tork Motors, which is in a competing line of Ola. He's also the chairman in ANI Technologies, as well as few other startups which are in related line, which means, the attention can get diverted. There can be future conflicts as well. Also, I would like to see one warranty cycle for Ola because, their first product would be probably about to complete the warranty cycle, maybe in a few months from now. And the warranty reserves look slightly insufficient to me. So that could be a big risk if things don't pan out. Secondly, attrition rate is pretty high. Almost 45% for first 6 months ending this year, and last year was 47%. That's a very high rate for a company which thrives on IP and the good side is, as I said, even a lot of good names like Tesla are also loss making. I'm not comparing that here, but from the current text, I think the losses are high, attrition rates are high. I think I would like to be watchful here.
I was there was a panel discussion and at this IPO, right? Bull market and IPOs. Somebody asked, in the audience asked Mr. Ramesh Damani, he said, I have a company, I want to do an IPO. How should I go about it? So Mr. Damani picked up the mic and said, well, don't think about it, do it now. Go leave this event, go file.
Doesn't matter the business, doesn't matter anything, just go file.
This is the best time, right? I mean, if you want to raise money, it's absolutely the market.
But I think this Ola in particular for me is going to be very, very interesting because it will also be the test of the maturity of this bull market. And then we went through the 21 phase, right, where a lot of new businesses came in, they were bid up, and then we know what happened. The businesses and promoters had to go through a learning curve. So now EV is the first pure play EV listing. Let's see how this one goes.
I think in this case, maybe the reason is different. It's a physical business, first of all. It's autos, right? EVs are the future that we know. It's only a matter of deciding which one will win. In 2021, the tech IPOs, the new digital business, I mean, they were kind of untested, new in the sense, I mean, they were all virtual digital businesses.
And the way of valuation as well, and price to sales, and then public market said, no, price to earnings is still
important. Here it is more settled. I mean, you sell 2 lakh, what is the break even? I think the break even for Ola is about 3 lakh. I mean, if they sell 3 lakh units, they turn profitable at a PAT level, etc. But let's welcome in Gautam Shah as well of Goldilocks Premium Research. Gautam, good to have you with us here. We're talking about the market back at Wednesday's high, which is a new all-time high. Your sense from here, Gautam?
Yes, Prashant, good afternoon. I was on your channel, I think the day after we saw that last Wednesday's big fall, and there was so much concern about whether we are going to see any sort of follow-up on the downside. But I think, with global tailwinds being so strong, India's domestic liquidity being so strong, earnings the way it has been off late, it just seems that this market cannot be derailed easily. And these shakeouts that happen from time to time, these short, sweet, quick, intraday, single-day corrections, it just helps to keep euphoria at bay. So I think we are any which way in a seasonally positive period. There's a lot of positives going for India. Numbers are not important on the index because I think we are at uncharted levels. But I think the key takeaway is that a month back we were complaining that the top 50 was not firing and everything else was doing well. Now the top 50 is firing. I mean, look at HDFC Bank, look at Reliance. Some of these stocks have made a solid comeback, and when banks and IT do well at the same time, it just takes Nifty into a different trajectory. So I think this is not going to end anytime soon. There could definitely be some volatility in the month of January, but I think there's a possibility of a move towards 22, 200, 300, which has been our medium-term target.
You know, we've not had even a decent size shakeout in the last couple of months. The last one was on Friday. It lasted for exactly 1 day. And then on Thursday, Friday, you know, Tuesday, Wednesday, markets are back to their all-time high levels. But Gotham, do stay on. We need to slip into a very short break. We'll come back and take this market conversation forward.
CNBC TV18, embarking on a quarter century of excellence.
Welcome back. Markets at an all-time high level, 21,590, but some of the PSUs are correcting. Pull up the Nifty CPSE index. In the morning, it was up close to about 1.5%, and now it's completely flattened out. So as the day progresses, the morning, the first half, we've seen some profit booking set in into the CPSE index. And the PSUs where there is some correction are the oil marketing companies. So IOC is one name. You pull that up. Concor has slipped. It's down close to about 2/3 of a percentage point. You have cuts coming through on BEML, HPCL too, a sharpish fall in the last 10 minutes. What's holding up pretty well, you've got strength in the PSU banking index. That's still up. Metal index is up 1.25%. Autos, banks also looking quite smart. But with that, we're going to wrap up on trading hour.
Yes, absolutely. But all the market action is going to continue. Prashant, of course, stays on, and he'll have more questions, I'm sure, for our market guests as well. All-time highs and still holding.
Questions and anecdotes. Well, stay with us. We're back after a very quick break.
CNBC TV18, embarking on a quarter century of excellence. CNBC-TV18, embarking on a quarter century of excellence.
Well, 21,600. We're just 10 points away from that. The market has hit a fresh record high going out of this year in style, as we see on the Nifty, the frontline indices, all the group stocks, Tata Group stocks doing extremely well. You name it, everything's doing well. So much so that the market cap of India has crossed $4.3 trillion, a tad higher than our GDP of $4 trillion as well. I'm Mangla Malu. With me is Prashant. Prashant, continuous up move is what we're seeing in the market, and our continuous coverage continues.
Absolutely. Well, this is halftime report, and I have to say that the halftime so far has been pretty good, right? I mean, half the day, and we're back at. I was just joking and saying that we are back at 4-day highs because the last high was 4 days back. It's just a one-day fall, and you're back at new highs once again.
You know, unlike what the Indian cricket team did in South Africa, all the top order batters for the market are doing well today. The market's firing on all engines. What are the top three weights on the index? We have Reliance, which has moved higher, is at the high point of trade. We have HDFC Bank, which was an underperformer, has come back in style over the last few trading sessions, up and about at the day's high as well. And the third one, of course, is Infosys. From yesterday's low, Infosys has rallied about 4.5% itself. So that's a big up move that we're seeing. So all these indices doing, all these contributors to the index doing extremely well, as you can see on your screen in terms of top contribution. And to add to that, we have L&T as well coming in and playing a decent knock with the orders that they won in their Saudi Arabian business, close to around 10 points being contributed by these counters as well. But as our market coverage continues, as does our battery of experts, they are still with us, and we'll be joined by one more. Gurmeet Chadha of Complete Circle is still with us. We have Gautam Shah of Goldilocks Premium Research coming in as well. Gurmeet, we'll talk to you about stock ideas, etc. But now that we're at a record high, and this is levels, etc., are something that Gautam tracks very closely. Gautam, how long before we get into overbought zones? For those who have missed out on this rally, do they get an opportunity at some point to enter lower levels, or maybe they have to bite the bullet, enter at these levels itself, and maybe continue to hold on?
I think overbought is a very relative and a very subjective term. And having seen the 2003-2007 bull market, we have realized that markets can stay overbought and yet continue to move higher. And this we've seen multiple times in the past. So given that, I think our markets have been overbought for a while, but there has been a sort of a rotational correction across stocks and sectors. But now we've come to a point where large caps, mid caps, small caps, all are doing well at the same time. And even as we speak, there are so many names which have come out of hibernation. Like, for example, the chemical space. The sector underperformed for the last 15 months, but they've beautifully come out of a range in the last 2 days. I see a big opportunity there when we've actually covered a few stocks for our clients. So, one should not focus so much on the index. I think this has become a very theme-specific, stock-specific market. And if you are in the good stocks, if you are in quality stocks with good institutional interest, you will get rewarded irrespective of the Nifty level.
Gautam, I was just seeing which are the stocks, right? This is the way that after that last Wednesday's shakeout, which are the stocks which have come back the sharpest, right? So three names stand out. Hindalco, it is much higher than where it was at the high point last Wednesday. I mean, this purely just momentum near term. There's Wipro. Wipro out of the blue has done very well. It's up about 9% in the last 4 days. Hindalco is up about 10%. And there's something like a Divi's Laboratories, which has done well. Anything stands out to you in terms of just momentum here?
I think the standout takeaway is really that newer names are participating in this rally.
Yeah.
These were all fundamentally sound companies, and now with them joining the party, and let's not forget HDFC Bank, given what it's done in the last 3 weeks, I think it's been single-handedly responsible in a way to take the Nifty to levels of 21,500, because even last Wednesday's correction did not have any impact on HDFC Bank. So I think newer stocks participating, banks doing well, IT doing well, pharma doing well, is obviously a good space to be in. But then, this is a seasonally positive period. Global markets are super strong. But I'm pretty sure as we get into January with earnings, there will be some volatility. So that's probably the only hitch I have at these levels.
All right. Nifty Bank also at a fresh record high just as we speak, above that 48,200 mark. Has hit a record high in style as well. We have HDFC Bank, of course, we just crossed that 1,700 mark in terms of a share price, just about 3.5% away from a fresh all-time high on, rather fresh record high on HDFC Bank as well. The Nifty has also managed to cross past that important 21,600 mark, touched it, and now is meandering just below it as we speak. Gurmeet, they say when everyone is greedy, be fearful. Are you fearing anything in a market where everything is moving?
So, Mangam, not really fearful. As I said, we are a little cautious in fresh deployment. I think I'm favoring more large caps right now. So look at, for example, M&M still trades at about 16, 17 times trailing, 14, 15 times forward. I think they had a very decent run till the market got a little put out by the RBL investment they did. If you see their tractor market share has inched up on back of new launches. I think government will up the agri budget more as we enter into the last year, which could be beneficial for both farm equipment and tractors. They're at 41.5% share. The UV share has improved to more than 18% now, almost making them the fourth largest. So they are hitting back there. Earlier they used to be 20%. I think now they still have an order backlog of almost 2.8 lakh units. I think this quarter would be good for them. We like that. There are a lot of agri names, agrochemical names, which we like, especially the ones which are more backward integrated. So one, the pesticide prices have stabilized if you do a ground check. Also, the crop prices would be better, which makes a good case for agri input companies. So I think PI has been on a lot of news on few Chinese companies launching the same product in 2025. I think the market, in my view, slightly overreacted. But when prices are expensive, such kind of reactions will come, and that's the risk right now. Everything seems to be priced to perfection. The railway capex, the defense names. You're already discounting next 5-year, 10-year order books. None of them have great execution track record to fall back into. A lot of it is uncharted territory. So some profit taking in names which have run up, let's say 100, 200% in last 6 months or 12 months may not be a bad idea, and maybe rotating back to some more value themes, contrarian themes, I think is a good idea. I think overall, next 2-3 years are very good for the economy. So we are keeping some powder dry, just like 5-7%. We're not really taking too much cash call just to take advantage of dips which you may get. You got one on Friday. I think there'll be more events like these as we head into the new year.
Right. Gautam, I wanted your views in particular on LIC. I mean, you speak about momentum stocks, etc. Now, this one has been a big underperformer in the insurance space itself, and now this month itself suddenly it's got some funk back up almost 18% and last week it got that additional kicker coming in from the can for minimum public shareholding being kicked down the road by about 5 more years as well. So what are your thoughts on LIC from a chart standpoint? Do you think it warrants a look at?
See, I think there is a rush of money into underperforming stocks. I think we've seen this trend, and market men seem to believe that because a lot of these fundamentally strong companies haven't done well, they will do well now. Everything is being painted with the same brush. But to be honest, I still want to stick to the larger private insurers. I think there's a lot better visibility, structural trend. But one point of bother here is the COVID numbers. I mean, we've been hearing about it in the last 4 or 5 days. Hopefully, things will all normalize. But if things do not go as per plan, insurance is a sector that can get hit. And we saw it happen in 2020, after which insurance did nothing for a year. So just because of this single reason, I think from a shorter term perspective, I don't think there is a trading opportunity. But the longer term thesis for insurance stays intact. So we love HDFC Life, SBI Life, ICICI Lombard. I think there are very big opportunities from a 3-year perspective. But 3 months, maybe take a step back and look at other spaces.
Got that. Gurmeet, Bajaj Finance, any thoughts? We reported that RBI letter to Bajaj Finance about their credit card with RBL, and RBI seems to be a little unhappy on that. And you throw in the fact about all this unsecured loan business as well, and Bajaj Finance is a large player there. What are your thoughts? I mean, I was reading a Kotak note. They've on the back of what we reported yesterday, lowered their estimates generally by, I think, about 4-5% earnings cut. Your thoughts?
So, Prashant, string of negative news. First, there was some embargo on some digital products. Then there was an increase in risk weight by RBI. Then I think the co-branded card with RBL, RBI only gave a 1-year extension. And then, I think there's also some bit of overhang in my view with Rajiv now, going out and the new management coming in, whether you can sustain a 30% growth on this kind of balance sheet. I don't think so. On unsecured, they are too perturbed because less than 50,000 is less than 1% for them as far as the loan. So I think that's not there. It's just that incrementally, slightly, risk weight in general will lead to more, capital getting allocated towards that. And can, in the short interim, pull down a little bit of return ratios. Not much again, very marginal impact. Also, Prashant, as I said, it's the pricing, still trades at 6 times. Even Chola, if you stay, 5, 6 times. Now, whether you want to give a 1 or a 2 book value to a 20% credit growth, 25% credit growth, or you want to give 6, 7, continue to give that 6, 7 multiple. I think that's the choice you have to take. So it's not that there's anything wrong. It's just that the market probably, as even Gautam made that point, likes HDFC more. You can get that 18% growth at 2.2 times. You can get that 20% growth in Axis at 1.8 times, right? So it's just the relative thing. And I think RBI will go clamp down more on unsecured lending. So I think in general, NBFCs would slightly underperform private banks. The only space which will get probably do well is the housing finance.
All right, and you'll be happy to know that Tata Consumer has hit a fresh record high as well. Gurmeet, you've been liking this stock for a very long time, up around 1.5%. In fact, it's done well this month, up around 9%, and most of the gains have come by just in the last 6 or 7 trading sessions. So if you pull up the chart of Tata Consumer, you will see a little bit of a give back from record highs, but nothing really to worry about. For the market itself, we're seeing a wee bit of give back from the record highs. Again, the Nifty is down about 20 points. The reason why it has happened is because some of these IT stocks, after a bit of a rally, have come in for some profit taking. Wipro, for instance, has now moved to the low point of trade. So we're seeing some profit booking out there. TCS too has moved lower, and some bit of profit taking, or maybe a little bit of underperformance coming in from the FMCG pack. So Britannia is at the low point, as is Asian Paints, and ITC, which is a slightly heavier weight on the index from these three, is at the low point. So that keeps some of the gains that we're seeing in the markets in check. Thanks a lot, gentlemen, for joining in, Gautam and Gurmeet. What we'll do is take a short break, come back, continue our focus on the markets. A fresh record high is what we've seen on the major indices, the Nifty, the Nifty Bank, all the other stocks doing extremely well. Come back, continue our coverage on the markets.
CNBC TV18, embarking on a quarter century of excellence. CNBC-TV18, embarking on a quarter century of excellence.
Okay, welcome back. So what 130 points is what we have on the Nifty, and we're at 21,570. So I think there's a bit of a give back from the day's highest point, but nothing to really complain. The high has been made at 21,603. Nilesh Shah is joining us in our studios here. He's Managing Director, CEO at Envision Capital. Nilesh, great to have you with us here. Thank you very much for your time. Season's greetings. How are things looking, Nilesh? I mean, looking good. I can't complain, right?
Well, thank you for having me here, and season's greetings to you all and the entire team and all the viewers. Yeah, absolutely, Prashant. I mean, this is really great times. I mean, these are wonderful times, great times. What a year it has been. Totally contrary to the general expectations. And I think it's great to see the market end the year on such a high note and on a record high. So yeah, I mean, absolutely great times.
It's also the time to make forecasts for next year. I know you're not in that business anymore. It's been ages, right?
Yeah. So, I mean, I left that long back.
So, but since you're here, I mean, tell us, I mean, not forecast per se in terms of what Nifty will be or that will be, but generally, how do you think about the next year after this fantastic run that we've had?
I do expect the good run to continue. I think at least purely from a macro point of view, 24 is expected to be a much better year. I think the growth should be pretty much intact in terms of our economic growth rate. I think inflation, probably the worst is behind us. It's probably peaked out. So I expect overall to be good. I expect stronger liquidity from global investors.
Right.
I see a much higher participation from global investors for two reasons. One is, of course, the India factor itself. And the second is that China has been a huge underperformer, and I see a lot of allocations move away from China into India, as India is exhibiting now some of those growth dynamics, which probably China demonstrated 10, 20 years back. So I see these kind of trends to kind of come to fore in 24, and that makes me continue to be very positive.
You know, of all the things that you said, if one was to make a Venn diagram of the India theme doing well, stocks which a lot of stocks have done well, but a lot of stocks haven't done well, then the FII participation increasing, all the macro theme, the common shaded area between all these three Venn diagrams would be HDFC Bank.
Absolutely.
Something that you like.
Absolutely. I mean, there's I mean, of course, the large cap private banks is going to be a standout sector.
Right.
But I think of that, HDFC Bank clearly continues to be the big favorite. And purely because it's just, yesterday I just saw, I mean, I was just doing a check, and HDFC Bank on trailing earnings, I know that we look at price to book for banks and P multiples is the wrong way, but the way I look at it is that it's a growth stock.
Right.
And if I look at on P multiples, it yesterday was at 18.8 times trailing earnings, which is a discount to the Nifty. Which I have never seen in my investing career, that HDFC Bank trades at a discount to the Nifty valuations on a trailing earnings basis. And that to me itself is a standout indicator as to why HDFC Bank can end up being a good investment opportunity.
That's number one. What is number two in that?
I still think, again, it will be a private sector bank. I think Axis Bank.
Okay.
I think Axis Bank has had to do a lot of heavy lifting in the last so many years. I probably think that the heavy lifting is now behind them. And the outcome of all that heavy lifting and all the growth measures that they have undertaken over so many years, I think are now beginning to yield results. And so I probably think Axis Bank could be a great investment opportunity.
And with NBFCs, I think you liked Home First?
Yes. So Home First is, again, I think it's an outstanding compounding story. I probably think it's one of the best compounding machines which are there, of a business growing at about 30% and able to manage NIMs and asset quality relatively well. And the direct outcome of that is a continuous expansion of ROE. So I think to that extent, I think it's fantastic. Obviously, of course, the intermittent overhang of the private equity funds coming in and selling and all that, that overhang remains. But I just feel that as long as the business continues to do well, there's an appetite for that overhang.
Just to complete that circle on financial services, I mean, HDFC Axis, there is Home First in the housing finance NBFC space. Anything else? There is all these capital market plays and wealth management as a business. I mean, anything there which you...
So for us, the best proxy to that has been Angel One.
Right.
We've been investors in Angel One ever since its IPO, post the IPO, probably in the first few months it went public. That's the time we kind of spotted it and invested in it. And I've continued to be an investor through and through 21, 22 and 23 as well. So we've liked that, and it's one of our leading positions as well. And the business, I think, has performed remarkably well despite all the competition and the possibilities of disruption. But despite that, I think that the business has done really well. We continue to own PB Fintech. That's essentially the insurance distribution business, as well as distribution of personal credit and credit cards. So that, I think, business continues to, again, shape up relatively well. So these are some of the other things that we own in the overall financial services, banking, and the BFSI space.
Where are you placed on this entire PSU theme? Because a lot of people have said this was the year of PSUs, and the next couple of years will also be the year of PSUs. Some are playing it via the defense theme, some are playing it via the railway theme, some are playing it via some of the PSU financial theme. Where are you placed on this, and what are your thoughts here?
Yeah, so I think my thoughts are that railways and defense will continue to essentially be the best places.
Despite the run-up.
Despite the run-up, because the growth is going to be phenomenal. I think, Mangalam, one of the things which one has learned over the years is that as long as the growth is intact, the heady growth is intact, clearly I think the valuations then have no bar. And we could keep arguing whether 20p is high or 40p is high, but then valuations don't end up being any bar. The challenge comes up is when the order book accretion peaks out, but that still seems to be yet quite far away. So I still think railways defense will be the big space.
What names there, Leif?
So we used to earlier like names like Bharat Dynamics, Garden Reach, and we own them, and of course we've now totally exited them as well, because we're finding relatively better opportunities, probably from a valuation kind of point of view. No, I just think we've increased our weights on the private banks. So we were there in them, but we've of late increased our weights in private banks because we just think now that the valuation trade-off is quite.
But for railways, you find them a little punchy.
I think now, yes. I surely think that valuations have got heady. And it's now going to be a question of timing your exit rather than essentially kind of thinking about...
Not timing your entry, timing your exit.
Timing your exit. Now, I don't know whether that's like 1 week away, 1 month away, 1 quarter away, or a year away.
Right. But you don't want to buy closer to where you think,
I don't think they're now buys. I mean, post the kind of run-up. I mean, I was just seeing some of the defense, PSU defense names. They've gone up by 50% in the last... month and a half.
So same for railways and defense?
I think so. I clearly think so.
This is the consumer space, the entire consumer space. What's the top idea?
It's looking attractive. The consumer space, especially the tier 2 consumer space, is looking extremely attractive. So, of course, so far we've backed names like Radico Khaitan, Mrs. Bector. These are the names that we have backed. But I think probably now some of the favorites could be names like Pratap Snacks, for example. The packaged foods business, I think, is continuing to witness good traction in terms of demand, but most importantly, I think margins are set for expansion. Right. Majority of these businesses were challenged because of high crude oil prices, higher freight costs, higher packaging costs, and a bit of sluggish demand as well, in which it was difficult to pass on some of these spike in input costs. I probably think the worst is behind for them, and we are entering a period where margins could potentially expand. And when that happens, the earnings could pretty much grow in double digits, and therefore these are poised for strong performance.
And in light of that, it's usually the second-tier companies that do a lot better than the larger-tier companies, because the larger-tier companies then start facing competition from these second guys. And we've seen that, spoke about Vectors doing well. Jyoti Labs, for instance, has done extremely well this year as well. We've seen some names like Imami, etc. as well. Final question, just to, finish our entire range of discussions that we've had. You speak about growth, you speak about valuations. Both of them together are available in the new age companies. You have spoken about PB Fintech. What are your thoughts on names like Zomato, Delivery, Nykaa, Mamaearth, all of them?
So I think all of these are great businesses. Okay, I mean, each one of them, and they still have the potential to grow quite significantly. And I wouldn't be surprised if, say, 10 years later from now, these businesses could potentially be maybe any times 4 to 6x or maybe even 4 to 8x of where they are currently as businesses.
Yeah.
The challenge again is going to be that I think one is valuation and the kind of momentum that they have displayed. So I probably would think is that sometime in 2024, wait for a weak spot for any of these businesses. Wait for a weak spot, wait for a weak quarter where the market probably swings to the other extreme, saying is that these are businesses which are probably damned or doomed. and that itself would be a great opportunity. So I would probably say that look for an opportunity in times of adversity for these kind of businesses.
Any IPOs recently which have listed at 50-60% premium and you said, well, I wanted to buy that, but obviously not here. And then as you use the word damned or doomed, and I'm going to do it when one of those things happen at some point.
Yeah. Plenty of them. I think plenty of them. I think, Prashant, the good thing about these IPOs, I think, is that these are good businesses. Unlike I've seen many of these IPO phases in the last 10, 20, 30 years of my investing career. And I've seen several times where the quality of the IPOs was not good earlier. What I'm seeing a big difference this time, I think, these are good companies. A lot of them have done remarkably well, and they are well-sized companies. These are not like some of those micro caps and all of that kind of stuff. So I think these are good companies, just that the valuations are just too frothy.
Anything you like?
So I think some of the consumer names, I think recently we've seen IPOs of companies like, say, Cello or Flair, for example. These are good consumer franchises with very deep distribution reach and strong brands. And they're not segments where there's lots of competition coming in. And they could probably end up being good businesses and good investments as well. I just feel that at current valuations, maybe in some of them or in most of them, valuations surely are frothy.
They're penciling in too much. Thanks very much, Nilesh. It's a great chat as always. Appreciate your time. And if we don't see you before the end of the year, all the best to you, to your family,
Thank
to
you.
your team.
Thank you so much.
Thank you.
Thank you.
All right, we'll take a quick commercial break here. And I think the market just to 20,546. So from the highs, we're off about 60 points or so. We'll come back, and I think we have a consumer discussion lined up in just a bit from now. Stay with us.
CNBC TV18, embarking on a quarter-century of excellence. on a quarter century of excellence.
Well, the age-old saying that, there is always some profit taking at record highs is perhaps playing out right now. The Nifty is now sitting with gains of just about 93 points. Decent distance away from the record highs that it hit earlier in, this hour itself. The mid-cap index is usually the first foreteller of how things pan out in the second half. And that is what will make the markets very interesting right now. Why do I say that? Because one, the mid-cap index has moved into the red. Secondly, if you pull up the intraday chart, the crisscross lines, you would see that the stocks which are advancing have now fallen below the number of stocks which are declining. So we have about 1,600 stocks in the red side as against 1,400 which are advancing. So there you have it, those lines have intersected and the red one has crossed above. And there had been some signs of, the markets moving higher with regards to the India VIX as well, having crossed that 15 mark. So let's see how the second half pans out from record highs itself. But as we speak, let's talk about the consumer space, the snacking space in particular, Bikaji Foods International. We have the COO, Manoj Verma, and the CFO, Rishabh Jain, joining in now on the show. Thanks a lot, gentlemen, for joining in and keeping us snacking through the festive season and perhaps through, the year end as well. I have to first ask how the festive season itself has been, because, we did see a bunch of gift boxes come around from the house of Bikaji itself in the form of sweets, etc. Can you tell us how the third quarter so far has been for you in terms of volume growth, in terms of the kind of products that have sold, and have they sold at higher margins than what we've seen in the first half of this year?
Yeah, thank you and good afternoon. See, it so happened that, if we talk about in terms of quarter, so there was a delayed Diwali, so hence, quarter two business shifted to quarter three. So I think it will not be fair if I just speak about, the quarter three numbers, because they will be, by far higher than the yesteryears or the erstwhile quarter three last year. But now talking on Diwali this year, this has gone extremely, extremely well. I think there are two reasons for it. One is that our better preparedness, the aggressive plans, what we had, the better alignment with the retailers, with the modern trade accounts. So therefore, making our fill rates and the right assortment available in the right place. So for us, Diwali was really, really nice. And the success of Diwali is also measured by that what is the kind of leftovers or returns you get to have, coming back from these retailers. So which is also, much lesser or almost negligible if we compare over last year's.
So the first half of this year, you've done about 10.5% volume growth, closer to 10% revenue growth. When we spoke, you had a 20% volume growth target for the entire year. At the halfway mark, now that you have Diwali behind you, are you confident of crossing that 20% volume growth mark? And what are you penciling in terms of revenues?
So what we always said was that about 18% plus minus volume growth kind of a stuff. So if we look at quarter three also, so our volume growth is, will be in line with, what we have said and on track for what we said.
Okay, good morning, gentlemen. Great to have both of you here, and season's greetings, Prashant here. Just to take on that point further, is gifting a pretty large segment during the festive season? I mean, what are the size of the, if you categorize that separately, or if you have numbers?
Sure. So indeed, gifting is very, very big, and it plays role in quarter two and quarter three only. So these two quarters are relevant for gifting. Now, gifting we look at in two parts. One, of course, are the gift boxes, Prashant, which we just spoke about. The other set of gifting also is, the sweets pack in silos. So like Son Papri, Rasgulla, Gulab Jamun, Kaju Katli, so on and so forth. So these also, they get distributed during this festive time. Now, if I look at, 70% of these, the gifting or the entire stuff happens in just these two quarters. So that's the kind of quantum what we have.
And when we say gifting, this is not just, we're talking about corporate gifting? I mean, sort of institutional level across?
No. This is, see, corporate would be a very small part of it. I mean, we are very, very heavily present across general trade stores, who sells these gifting products, also in all the modern trade accounts. Corporate gifting, of course, is also an offshoot of, these guys buy from modern trade accounts. And also, we have certain contacts, people come to us that no, we want to give these packs to our laborers, employees, or whatsoever, and that also. But that's not as large, to be honest.
All right, irrespective of what he says, Prashant, in terms of the size of the gifting market, my sense is it would be 5 times more than what he says because of the re-gifting market as well. Son Papri boxes doing the passing the parcel rounds itself. But that's on a lighter note, Manoj. Let's come to you, Rishabh. You did indicate that margins will expand. The first half is 14% with a strong volume uptick expected in the second half of this year. Where can we see margins head? How much are you passing on to people in terms of price cuts? What does that number look like by the end of this year?
Yeah, so basically from margin perspective, see, we have started journey from 7-8% in last year to reach to 14% in first 6 months. So this quarter also largely we are on track, and that's what we have budgeted. So you will see in first quarter our ad cost is very minimal. In this Diwali season, our ad cost play a very incremental role. So largely we will be on track and we will be at the same level what we have done in first 6 months. Close between 13 to 14%. That's the margin target what we are taking.
All right. At the start of this year, you all went ahead and bought about 51% stake in this company called Bhujia Lalji. I'll ask about the scalability of that. But as we speak, you've also given an indication of you wanting to increase your revenue share coming in from Western Snacks. And we have a Western snack listed company on the bourses with a market cap of close to 2,500, 2,600 odd crores. And there is a likely seller in that in the form of a private equity player, say someone like a Sequoia wanting to sell nearly 47% of the stake that they hold in Pratap Snacks. If that's out in the market, will you be a ready buyer? How does that look in terms of an opportunity to you?
So basically, it's a big company. Big company will not be a ready buyer, of course, because it's a small stake. We want to be known as a ethnic snacks company. Western Snacks play a very small role in us, overall 7-8%, and this is an additional sales which comes in because we are present at each retailer's each distribution level. So this is a small, but yeah, overall Western Snacks, of course, that's our target is that we'll take this to 10-11%. But yeah, our core will be because we'll always be known for ethnic snacks and sweets company. That's what.
So you won't be a ready buyer in Pratap Snacks if at all it's up for sale.
Of course, if they come at a right price, that's we don't. No answer for this.
Okay, there's no answer for that. We'll hold you on to that as and when that happens. And final question, Manoj, you did indicate that you want your revenue from Western Snacks to increase. How about your revenue coming in from sweets? Because that has become a big market as well, and it's a high gross margin product.
So, see, we continue to invest behind R&D for our sweets business as well. See, sweets, now the challenge what we face is that our capacity constraints come during the peak demand time. So that's what teams are working for, that how's that we can complement from back end as much demand what we have. And second is that how's that we can make round the year kind of a stuff. So certainly you will see, that the movement on the sweets will also be on, and we will be a double-digit growth, on and on for this sweets category as well.
Any projections that you'll have for the next year before we let you go?
Next year is what all I can say is that that the growth momentum what we have, we will continue to live up to that. Also, if you look at category, you look at industry, so there's a recovery which is now being seen. So, in fact, urban, which has grown at about 10.8% on our overall food category. And also there's a recovery in rural segment as well. So I think we have always been ahead of the category growth, which is what we'll continue to deliver.
All right. Thanks a lot, gentlemen, for joining in and giving us an update on the demand environment right now and how the second half of this year is likely to pan out. Manoj, Rishabh, thank you for joining in. Wish you and your team a very happy new year.
All the buyers and consumers. Thank you.
All right. With that, take a short break, come back, focus on the markets continues. The markets itself and a lot of individual stocks.
CNBC-TV18, embarking on a quarter-century of excellence.
Because, it's been a small give back from the highs itself. The Nifty is still up almost 600 points from the low that it hit on Thursday of 20,976. So in comparison to that, it's just a mild bit of a pullback. There has been firing on all cylinders, right from the Nifty Bank. Reliance doing well as well, though some bit of profit taking coming by on the Nifty IT. We've seen some writing at the 21,500 put, 21,550 put. And, the sense that one got was that the writing at the 21,600 put was a little more aggressive and perhaps unsustainable. And that's why the market's given up from 21,600 levels, though we still have half a trading session to go before we wrap up for the day itself. For the Nifty Bank, the fight is for the 48,000 mark. The 48,000 put writers extremely active. Equally active are the 48,000 call writers as well. So who wins this tug-of war around 48,000 ahead of expiry tomorrow is something that we will have to watch out for. There were signs of overheating as well. The Nifty put-call ratio was close to around 1.4, and now as we speak after the give back, it's come down to around 1.28. The wicks had crossed that 15 mark as well, telling you that there were signs of heating. So let's see where again the signs of heating settle at as well. And we have seen that also in the mid-cap end of things, where the advanced decline ratio is now split right down the middle. Having said that, there are a lot of pockets of strength, and cement is one such. Nimesh had alerted us earlier in the day that there are positive brokerage notes coming by, and Dalmia Bharat and Ramco Cements are very well bid at fresh long additions seen there. Take a short break, come back, shift focus away from the equity markets, talk about the commodity space as always. Manisha Gupta joins in, and with her will be the former Agricultural Secretary Siraj Hussain. Stay tuned.
CNBC-TV18, embarking on a quarter century of excellence.
Welcome back. Joining us on the show is Siraj Hussain. He's former Agri-Secchi, and he's on with us on the air right now. Mr. Hussain, I thank you so much for joining us. When you look back at 2023, while inflation was a concern, and the next year is going to be all about elections, but the markets do feel that with the kind of measures that the government took, perhaps were supportive for customers, but the industry feels that there was a lot of interference as well.
Good morning, Manisha. You see, it is clear that the government has been very proactive in containing inflation. And I think elections is only one of the reasons. The government is also concerned about the impact of inflation on interest rates, etc. You see, the problem is that the climatic conditions of the last 2 years have brought India to a shortage situation for most commodities. And therefore, wherever possible, the government has reduced the import duties and enabled import by private sector. For example, pulses, etc. Edible oils prices are already much lower than last year. So the government has its hands tight, and I would say on the whole, the government has done a good job.
How would you look at the coming year now? Because many of the concerns that we saw in 2023 perhaps will see a spillover in 2024. So whether it is about whether El Nino still continues to be strong, there are deforestation laws perhaps coming in Europe, and there are the mandatory biofuel mandates as well as another thing that the street is looking at.
You see, as far as the Rabi crop is concerned, if winter continues to be good as it has been so far, the temperatures have not risen to unusually high levels, and if February, March, etc., see cold temperatures, in the normal range, then I think the Rabi crops will be good, which means wheat, mustard, chana, etc. So that will be good, a good beginning for controlling inflation in the year ahead. As far as the Kharif crop of next year is concerned, we don't know how the impact of El Nino is going to play out. Now, global conditions, of course, have moderated as compared to what was the situation in the last 2 years when the Russian invasion of Ukraine began. Wheat prices flared up to more than $430 a ton. Edible oil prices also flared up. So both wheat and edible oils have softened, and I think we should be fine. If Rabi crop is good, then I think next year we can expect moderation in inflation.
So, Mr. the export, yeah.
And Manisha, you asked me about biofuel. I've been writing. We have written a paper with Shweta Saini that as far as India is concerned, food security has to be given a priority, and it is a wrong policy choice for the country to use rice for ethanol. We had projected that by 2025, when for which we have the 20% target of blending, we do not think that adequate rice will be available. So now, what we had not foreseen was that even sugarcane will be in short supply.
So what's your sense on how the ethanol blending situation will play up as we move ahead towards a 15% this year and a 20% in 25-26?
I do not think we will reach 15% this year. Even though the sugar industry has lobbied and it has been able to get a little relaxation from the government, but I think the government would not like sugar prices to flare up going forward to the parliament election. So I think this year we are not going to achieve the target of 15%. And that 20% target is also unrealistic because the Niti Aayog paper of 2018 had projected that 45% of ethanol will come from grains. A lot of it was to come from rice. I do not think we are going to have rice for ethanol, and even if we have a little surplus, I do not think we should use rice for ethanol. Also, there are new technologies coming for use of ether, for example. China is using ether instead of ethanol, where ether is manufactured in the refinery, in the oil refinery, rather than mixing taking place at the depot level.
Okay, so we could be looking at a challenging 2024 going forward as well. We'll meet you on the other side of this year. Mr. Hussain, thank you so much for joining us, and thank you for your views on all of that commodities there. But with that, that's all the time that we have on the show. But Business Lunch will take all the action forward.
CNBC TV18, embarking on a quarter century of excellence. excellence.
Nifty and Nifty Bank scale new highs but partly give up gains soon after. Most sectors, however, continue to trade in the green, led by PSU banks and metals. Wipro has filed a suit against its ex-CFO Jatin Dalal, who joined Cognizant in December. While the details of the dispute are unclear, the move has raised antennas given Dalal's long stint at the recent spate of exits. In a blow to the existing promoter group, a majority of institutional and retail investors of Dish TV voted out 4 directors, driving the company to promptly induct 2 others. Crude gains in metal shine as expectations of a pickup in China fuel sentiment, even as the Red Sea skirmishes add fire to the plot. SBI has hiked deposit rates for less than 1 year by 25 basis to 50 basis points and for the 3 and 5 year bucket by 25 basis points. The move is expected to nudge other lenders to follow suit. Hello and welcome to Business Lunch. I'm Sonal Bhutra and those are the top market headlines for now. But if you look at the markets, it touched a new record today but has come off from those levels as well. So the high for today was 21,603. We dipped from those levels around 50 points from the highs. But again, there is a comeback that the Nifty is attempting at these levels. So currently at 21,546. Across the board, there is bank that has come by. We have the Nifty CPSA index, which is the biggest contributor. The PSU banks also doing well. And the energy basket also is doing well in trade today. The metal index too up around 0.5%. Nifty Bank though, it has come off from the highs and that has led to that dip from the highs on the Nifty as well. The mid-cap side of things, they are slightly underperforming the market. So that's up 0.2% but not as well as what we are seeing on the Nifty right now. But do remember, it did dip into the red and saw recovery from there on. So we'll have to see which way things go. There was a substantial recovery in markets yesterday and today we are building on to that. But let's talk about some stocks which are on our radar and on the move as well. Cement is clearly the sector of the day with names like Ultratech Cement, Dalmia Bharat. We have Ramco Cement, Shree Cements. They are seeing some good gains following a bullish note from Nomura. My colleague Nimesh is getting us all those details. Nimesh.
The entire cement sector is buzzing in trade today on the back of a large upgrade from Nomura. Across cement names, they've upgraded a few stocks to buy from neutral and they've raised their target prices as well. So on Ultratech, the new rating is buy from neutral and there they've raised a target price to 11,500. They've also upgraded Ramco Cements to buy now and there they have a target price of 1250. And on Dalmia Cement, the new target price is 2,900 versus 2,600 earlier. Even on Shree Cement, they maintain a buy rating, but there they've raised the target price now to 34,400 versus earlier target price of 27,800. Now, why Nomura is bullish on the cement sector? They believe that the upward momentum in terms of pricing and volume is likely to continue. They expect the margins to expand on back of strong volume growth, pricing discipline, as well as relatively lower fuel costs. So, the momentum in terms of volume growth is likely to continue in the second half of FY24, and by FY25-26, they expect the volume growth to be higher than the last decade's volume. In terms of pricing as well, they expect the trade prices to improve as the industry exits the pre-election phase. So on back of strong volume growth as well as pricing discipline, they've raised the EPS estimates, target prices as well across all the cement names, and few stocks have now been upgraded to buy from neutral earlier.
All right, Nimesh, thank you so much for joining us with all those details. So that's the cement stock or the sector in focus. But I'm also watching out for Zomato because there's an interesting mutual fund action there. We've been talking about how Zomato has outperformed the market. It's up around 1.4% today. It listed in July 2021, but this year itself, it's up around 113%. So that's been a big move. It, as I said, listed in July 2021 at 120 rupees a share. It hit an all-time high of 169 rupees a share, but it did touch a low of 40.5 rupees a share in July 2022, and since then it's been a one-way move from there. Now the number of mutual fund schemes which have invested in the Zomato stock have seen a substantial rise. They were at around 99 in September 2022, but now at the time of October 2023 they have reached the level of 215. This is as per Value Research. Now if we talk about the number of schemes, how it has increased over a period of time, in September 2022 it was at 99, December 2022 it increased to 107, March 2023 increased to 113, and October 2023 2023, it has seen an increase to 215 different mutual fund schemes which have invested in the stock. Now, at current price, the mutual fund holdings in Zomato is valued at 11,440 crore rupees, and there are a number of mutual funds which are invested here. We have the likes of ICICI Prudential Balanced Advantage Fund at 1.27%. There's Nippon India Large Cap Fund at 1.29%. There is Axis Long Term Equity Fund at 1.36%. Mirae Asset Blue Chip Fund at 1.48%, and Motilal Oswal Flexi Cap Fund. This is the biggest owner here at 1.91%. So there is a lot of interest in Zomato. It has seen a one-way move, as I said, in last 12 months, and mutual funds are biting into this particular stock. So that's what I wanted to focus on today. But that's about Zomato. Let's move over to Dish TV. Over 71% of the company's shareholders have voted against the appointment of board members. Manglam is joining us now to tell us more. Manglam.
It's an unprecedented move at Dish TV. What exactly happened is that on Friday, the 22nd of December, there was an extraordinary general meeting to consider reappointment of a certain director and appointment of 3 directors as well. But in that, what has happened is shareholders have voted against the reappointment of Shankar Agarwal and the appointment of Rajesh Sahni, Virendra Tagra and Anchal David as well. More than 71% of shareholders have voted against this ruling, and that is, an unprecedented move because the company is now left with just 1 board member. And as a result of which, what exactly happened was that the company had to go ahead and approve the appointments of other directors on the board as well. Sunil Khanna as an independent director and Ravi Bhushan Puri as an executive director. So now, as these two individuals sit on the board of the company along with another director, what's needed now is a shareholders' approval for these 2 appointments that the company made. So we'll be awaiting details on another extraordinary general meeting that will take place, and the shareholders nod on the appointments of Sunil as well as Ravi too. And all of this in light of news reports that, Subhash Chandra Goenka himself is looking to buy some stake back from JC Flowers, which owns about 24.2% stake in Dish TV that they bought from Yes Bank. So from a stock standpoint, not much has happened because the stock is still being a laggard, almost a penny stock with a 20 rupee move. But from a corporate development standpoint, it is quite unprecedented.
Oh, it is. The stock is on our radar. That's a big that's the big development that we are tracking. Thank you, Mangna, for joining us with all those details. It's time for a break now, but when we come back, before that, we'll listen into what Atul Suri, CEO at Marathon Trends PMS, had to say as he discussed his outlook on the Indian and global markets and the top sector bets as well.
I do think that we are heading into a year which is going to see a very good upside in global markets. And what's going to change in India is that last year was all domestic, which is your domestic flows, SIP flows. Already December is showing it. But I feel that this year, the coming year, will be the largest FII flows the country has ever seen. But the important part is that if you've got sectors and themes which show leadership and you have conviction, it's best to hold on to it. The need for activity is something which is more your own limitations. Mindset is of most people is that, things have gone up. So they are like skeptical, oh, it's already gone up too much. Now, when I look at global markets, etc., what I think is that the global bull run in equities is just starting. If you start seeing, especially I think, look at the US, etc., you'll find that these markets are just now pushing towards lifetime highs. I do think that the year is going to be dominated by global markets. So when I see whether it's S&P or it's the Dow Jones Industrial or the Nasdaq, I see almost an 18 to 20% upside from here. So what I'm seeing is that not only is a bull market that I feel will happen globally and especially in the US, but what I think is that industrials will lead it.
CNBC-TV18, embarking on a quarter century of excellence. CNBC-TV18, embarking on a quarter century of excellence.
Welcome back. You're still tuned into Business Lunch on CNBC-TV18. It's time to talk about some national news now and focus on Ennore, a village in Tamil Nadu's Chennai that has seen a spate of industrial accidents, the latest taking place last night after an ammonia gas leak from Coromandal's Ennore minor port, which led to at least 25...